everybody. Welcome back to the Oil and Gas Rundown here at King Operating. I'm Rachel Griffith, the Senior Vice President here. And of course, my panel of gentlemen today, founder and CEO Jay Young with us, our COO Steve Mullican, and our EV of Land and Business Development, our EVP Bill Phillips. Welcome to the live today, gentlemen. Today,
thank you, Rachel.
You're welcome. Yeah, today we're jumping in. It is day 20 of watching the war in Iran. And of course, for us here at King Operating, this is something we watch very closely. Jay has been on countless, I don't know, maybe 50 or so. I don't even know where the count is now of different news clips and interviews because the world is watching. The U.S. is watching. And just to read a couple of headlines to really bring the impact. I'm not sure if everybody out there watching really understands the impact of what is happening. We have the IEA saying that this is the largest oil supply disruption in the history of global oil markets. Reuters is saying the world faces the biggest oil supply shock on record, and Bloomberg tapping in saying markets are facing a worst case supply scenario. So Jay, what are you seeing right now? I know you had an article you shared with us all over here at King about CNBC saying, hey, we could be seeing $150 oil, $150 a barrel. I mean, what are you seeing out there?
Yeah, well, that's great, Rachel. I appreciate it. I'll tell you what, I mean, people do see that it is affecting their pocketbook, especially if they're going to fill up. My daughter filled up the other day in Norman, Oklahoma, $80, over $80 to fill up. I don't know how long it's been or if she's ever seen that before, because she's only 20 years old, and the last time she filled up was when. But anyway, but you do see it, and yeah, there's been a lot of different. I've been on 5, 6, 7 programs today, or interviews, radio, TV, and they're all wondering what's going to happen with what's happening in the world today, and why in the world does the Strait of Hormuz have anything at all to do with me going to my tank and paying $80 when I normally pay $50 or $60? And why? And oil is a global commodity, so we're gonna see prices go up and down. And if they're hurt anywhere, disrupted anywhere in the world, that price does go up and down because it is such a global commodity. Not like natural gas here in the United States, so it's a lot different. But yeah, you're seeing a lot of different disruptions. You're seeing a lot of things happening, and if this war continues, because of the Strait of Hormuz, and I put a video out yesterday saying, President Trump, will you please not allow the Navy to go in and take tankers from one side of the Strait of Hormuz to the other, because they'd be like sitting ducks waiting for an Iranian missile to come or something. I'm like, please don't let the Navy do that. They probably do it just because they felt like it was their duty to do it, but we don't want them to. We don't want them to be sitting ducks out there in the middle of the ocean. So let's don't do that. But because and the more it's disrupted, the longer that disruption is in the Strait of Hormuz, the longer the war goes on, and the longer the war goes on, you're going to see countries, like Saudi Arabia, UAE, Iraq, these countries are shutting down a lot of their production right now, and because they can't get it out of the Persian Gulf. If you can't get it out of the Persian Gulf, you can't sell it, and you're not going to just stockpile it, in your country. So therefore, you just shut it in, and all of this activity has a direct impact on the price of oil, and we're going to see prices go higher. And the longer that this goes on, the more we're going to see prices go up.
Yeah, absolutely. I know it's interesting. Just some numbers for people out there watching. The Middle East produces about 30 million barrels of oil a day. 20 million of those go through the Strait of Hormuz. And I heard today that the Saudis are trying to at least reroute a small portion of that to the port of Yanbu in the Red Sea, because that's only maybe 6 million barrels a day. If you look at the constraint on supply, and especially with Iran now targeting actually some of those refineries and actual areas of production within United Arab Emirates, Qatar, and Saudi Arabia, it is an outlook, that we are unsure of what is going to play out. And I think now when we look at pricing, Jay, I haven't seen anybody saying that they anticipate even over, the next 6 months to see oil dip below $70 a barrel. Does that sound about right to you?
Absolutely. Yeah. And the longer it goes on, the longer you're going to see, prices and what's going to happen there. And even afterwards, I mean, we've been talking about the price going up for a long time. And we've been talking about getting longer contracts on drilling wells today because we do feel like the price is going to go up. Nothing to do with the war. We just aren't drilling as many wells in the United States as we were, a year, 2 years, 3 years ago. Rig count's down 30%, 50% in some areas. Therefore, we're seeing a lot of, oil coming off the market. And as you have this oil come off the market, and you need it, like this summertime, you're going to see prices go up. And when prices go up, you want to drill cheap or cheaper, and you want to produce it at a higher price. And there was no better place and no better time to drill wells than it was 6 months ago, a year ago, when you had cheaper prices to drill. And that cost maybe $11 million on a horizontal well, where now it may be 9 or 10, and then it'll be 11 or 12 in the next, few months or years, and then you're going to produce it at a higher price. But what if prices come down? And that's what, if you're on the other side of that cycle, it doesn't feel good.
Right. Yeah, we definitely at King Operating. I mean, we were able to get into the sweet time and drill at $60 oil, and now to see the impact for our investors on the up cycle of oil now is really incredible. Drilling wells at 60, saving 20-30% operationally, and then to come in and now actually be seeing distributions at probably this month oil is going to average at least $90 a barrel, if not more. So we've really been able to capitalize on both of these cycles, the downside and the upside of it. So Steve, from an operations standpoint, I mean, how do these kind of, geopolitical tensions affect, operationally drilling and timelines?
Well, initially the operations don't react immediately to kind of these, what are perceived as potential short-term impacts. So, it's not like right now we've seen, rig supply and rig costs starting to decline. But the longer it goes on, again, the reaction will start, and we'll start seeing rigs harder to pick up, and we'll see, a much higher day rate on them. And same way, and same thing is going to happen. I mean, the material side will happen a little quicker because transportation is going to, with the higher, gasoline, diesel prices, that's going to be the more near-term impact is as we start, buying pipe for our wells or other types of equipment, all that transportation costs will start impacting us.
Mm-hmm. Yeah, so those are kind of the changes that we might see around service and supply chain. I mean, I'd like to ask you, Steve and Bill, I mean, just talking about all that's going on geopolitically, I mean, all of you guys have been in oil and gas for I don't want to say a lifetime, but 40 plus years.
It has been a lifetime.
Your family's involved in oil and gas. What are your guys' thoughts relating to what's happening right now? You've seen some wars in your time. You've seen different things. What is your outlook right now?
Well, you're right. We have seen a lot. I mean, it was funny. I had a guy call me just the other day when I was at the grocery store, and this was about a week ago, and he told me that he and another friend were trying to find gas stations. They had actually gone to 2 gas stations that did not have gasoline, which I was shocked to hear about because I had just gone to Costco and that wasn't the case. But he was asking me, is this a good time to start investing? And I told him, I said, one, it's potentially short term, but I do feel like it's a great time to invest. I think, as Jay said, I think the even better time was when we're in the lower markets and stuff. But I think this impact that we're seeing right now, yes, at some point when the war ends, we're going to see, prices settle. But I think, they're not going to settle back to where they were. I mean, we're going to be back kind of in that overall average of where we've been for the last 20 years. We're going to be back in that mid 70s, probably 80 range is how I feel. But yeah, I mean, through the years, I can remember when I was in high school, when they had the oil embargo and there were the gas lines, and I hope that doesn't happen, but that's always a possibility. I mean, I think people have probably seen clips of that, where cars were lined up, for like a mile just waiting to get in, and they were rationing gas at like 10 gallons a car. So.
Yeah, and I think even those days, I mean, from the history of the U.S. becoming more energy independent, they were, the U.S. was relying on a lot of foreign oil at those times, correct? And that has really changed. I mean, we're still needing to import, I think, around 5 million barrels a day for our supply, but it's pretty drastically different than it used to be, correct?
Yeah, I mean, it is. I mean, the thing that's the major impact is our refining capacity throughout the country. There's a lot of, I just read the other day, I think there is a project. I mean, the first refinery in like, I don't know, 50 years is they're starting the construction project on that. And so you have refineries like on the West Coast that are there to refine heavy crude. And, so the type of crude that gets produced sometimes, even though we produce what would appear to be enough for us to be fully energy independent, we're having to basically import the type of crude that's better for, the products. And it really becomes a refining restriction that's causing us to have to import.
Okay. Yeah, that makes sense. So I want to jump over to Bill real quick. Bill, on the land and business development side of things, does this uncertainty, is it make it, harder or easier getting deals done and assessing? I know we're in Ochiltree right now. We're looking at expanding what we're doing in the mid-continent. Does this type of disruption impact you at all?
Well, it kind of depends. This is going to be a crazy answer, but sometimes it makes it both harder and easier at the same time. It depends upon whether you're leasing or you're buying or you're selling, and depending upon the size of the company that is doing the buying or selling, it can make a difference on them. But as far as leasing from individual landowners, which is what 95% of the U.S. is, or individual owners, it doesn't immediately have an impact, but over the long term, it certainly can. I remember when the Eagleford just started, companies were paying really, really big bonuses down in South Texas. And I had some folks as far north as North Dakota got wind of it, and they wanted the higher prices. And it was like, well, gosh, guys, that's 1,200 miles away. That has no impact on you. It kind of settled down, but it just kind of depends. But over the long term, any kind of uncertainty certainly affects the markets, whether you're buying or selling or lending or whatever. Just like the stock markets, the stock markets fluctuate drastically, but the stock markets like calm seas, so to speak. And right now we're not in calm seas. With the Strait of Hormuz, depending upon how soon that gets resolved, can have a slight impact on, especially on leasing mineral owners and royalty rates. Everybody sees the $100 to $150 oil, and it does have an impact. So now, both Jay and Steve are right. Now is the time to become active if you're not, in our business. And at some point that will all resolve itself, but will it fall back to prior levels? It might, but chances are, like Steve said, it's gonna settle out in the $75 to $80 range unless something else unusual happens somewhere else internationally, like North Korea acts up. I mean, it doesn't take a lot to disrupt, um, to disrupt any economy globally.
Yeah, very interesting. And I just want to thank Art Ortiz. I see your comments on LinkedIn, so thanks for joining us, Art. We appreciate you being with us today. And yes, I mean, absolutely, this is the time to invest. I mean, I think if you've even considered getting into oil and gas, I mean, number one, of course, just because of the, incredible opportunity it is financially with our opportunity, you're getting tax deductions, you're getting, monthly income plus the growth opportunity. But why would you wait till prices go down? Why wouldn't you capitalize on timing? Timing in investments matters. So 100%, Jay, it just brings me really back to think about, what we're doing at King Operating. We've got our 2 great wells in Bivens producing, 2 more being drilled, looking at, expanding up into Anadarko and really getting those J units ready to be, packaged up and hopefully going to market towards the end of this year. So, I mean, Jay, the J units are really an incredible opportunity for investors to see a divestiture potentially year one in their investment.
Yeah, it is. It is, Rachel. And thanks for bringing that up. Matter of fact, what the hell is a J unit? I mean, that's what we want to know. What is a J unit? And I'll tell you, I mean, it's something that I've talked about with a friend of mine for a long period of time. He's tried it. It worked very, very well when he did this. But I'm gonna draw a picture on here, and it's gonna be. Let's just use it for simple. Let's just say this is a 640 acre spot right here. This is 640 acres, and right now we have 4 of these. Well, we're creating 4 of these in the Bivens Ranch. The 2 that are already producing. Just think about that for a second. You have 1 long horizontal on the Bivens Ranch, and you're going to put enough acreage around that wellbore, and also to have 2 offsets, 1 on each side. So you have 1 offset here that you haven't drilled yet, and you have 1 offset here that you haven't drilled yet. What you're doing in here is you're creating value. So we're going in here and drilling the well, and we're not only creating value by hitting and producing the well, but we're also creating value by putting all of this in an acreage position, such as the 640 acres or whatever the case may be, and having 2 offset locations. And there's also multiple formations. So a person owns this if they decide to purchase it at the end of this year. So every year, and we met with a A&D group here, and this at lunch today, and Steve and I were talking about it, saying once the investors, they participate on these wells in our funds, and then at the end of the year, we're going to take this to the market to look for a family office or a public company, somebody that wants to participate on multiple J units. So they already know what they're getting. Let's just say we drill 4 wells in Bivens and 10 wells in Mid-Con this year. Those 14 wells will be on the market at the end of this year, and we'll think about a value inside our head that we would like to sell them for. I feel like we're going to get more than what we're going to, offer it for or think about, because you'll put on auction, a negotiated auction with a group, putting bids in and all that. And so that's every year we'll do this. So that's the great thing about it. I've thought about it. This creates a tremendous amount of value with a particular acreage position by putting 640 or 1320 or I'm sorry, 1280 or 9, whatever it is, putting this together, creating value within that one unit. Because a lot of family offices say, yeah, I want to buy some production. I don't necessarily want to take any risk. I don't care about that first write-off. Well, we know and we love write-offs. So we'll create these 5 or 10 or 15 different J units, if you will, like this, and put them out for sale at the end of the year. So in October, we do some, the A&D group that we choose will come out and say, here we have 14 J units. It's 100% available. We may not sell 100% of it, or we would, or not, but we could operate. You know, a family office would say, hey, I'll take 60% of everything you got. And they'll pay us, 50 million, 100 million bucks for that. We'll continue to operate. We'll drill the offset wells for them because they want the write-off in the future. And then we'll continue owning 40%, or the fund will continue owning 40% of it. So, and it'll be great cash flow back to the investors. So, hey, we always want to look for liquidity events, and you never know, literally, you never know when the oil price is going to be high or low, or when you're building that. It's kind of like the people that make it in this business, the 1% of the people that you read about in the paper, that make it, they make it because they got extremely lucky by increasing the value of an asset over time. And the oil and gas price was there at the same time. That's a double whammy. That's like hitting the lottery twice, hitting 2 hole-in-ones or something, and that rarely happens. So that's why we feel like, and we've created this exit for investors at the end of every year. So they'll look back and go, man, hey, we sold $100 million worth last year at 80. Not all of it, just some of it. And I got another friend that we had lunch with yesterday. I know, hell, we go to lunch a lot. But anyway, we went to lunch yesterday with a friend of mine out in East Texas, John Carr. And John Carr's motto is SHOE, SHOE, sell half of everything. SHOE. And so we're gonna put the we're not gonna advertise his shoe or anything, but I do like the idea that once that's house money. Sell half of everything in the oil and gas business. You can, work off it's like going to Vegas, making some money. Don't put your money back in your pocket. Go off their money. That's always a good feeling. We'll do the same thing here. And now that is a creation of King Operating this year in 2026, but also we're going to create another 1031 drilling program where we're going to have 1031s that you'll be able to do a 1031. If you sell an apartment or a commercial building or a royalty program or another oil and gas program, we're going to have to where you can participate in a 1031 drilling program. It's going to be amazing. I am very, very excited about it because it'll be the best 1031 oil and gas program around that you can participate on. Better than royalty. Royalty's slow and you'll never get your money back. Chances are you'll never get your money back. But a drilling program is going to be very, very exciting. We're going to bring it out in a few months. So if somebody, let's say we sell a bunch of that, so instead of paying gains on it or going back and saying we're going to recapture, put it in the 1031 program. We'll just keep drilling inside that program and making you more money. So we're going to be a very big company around here. We already are, but we're going to be a bigger company in the next 2 to 3, 4 years as we create these programs and do the right thing for the investor. Which brings me to my third thing, which is my second edition of my book, The Upside of Oil and Gas Investing. I know Rachel's got one somewhere.
Got it right behind me.
Yeah, right behind you. You got that. But I'm doing a second edition right now, and we're going to talk about J units. We're going to talk about the 1031 drilling, and we're going to talk about how do we make money for investors and what's the most important thing that we come to work for every day, and that is, investors, and thinking about how can we structure a program around here for you, the investor, to make money. That's our goal every day. So that's I don't know if I forgot anything, but I guess about it for me.
That's it. Yeah, I know. That's right. Nobody does oil and gas like King Operating for investors, especially for the retail investor. I mean, the J units. I mean, building oil and gas assets to sell for investors. I mean, this is what is really incredible. Other oil and gas companies are going to allow you to, participate in the production of one well or a group of wells. They don't include the good stuff. They leave out the goodies. That's what I'll say. They leave out the goodies. They just give you the producing wells, but really, I mean, so much of that inherent value is in the lease acreage and in the the offsets that are created by those producing wells. So that's why we're so excited about the J unit story. Absolutely, 1031 exchange is going to be huge. I mean, people who don't want to see that recapture down the road, just roll it right back in 1031 exchange into another program. Our investors are going to love this option, Jay. It's talked about a lot here, so much interest. So that is going to be huge. And yes, the updated book going to come out and we'll all be ready for that. It's going to be tremendous. So we've got a lot of wonderful things on the horizon here at King Operating. And if you're not involved with us and you want to learn more, you definitely need to go to kingoperating.com, fill out a learn more request to get in contact with us and find out how we can partner with you to really help with your wealth building strategy in your portfolio. Let's get some allocation into alternative assets in oil and gas and the potential, not just the tax benefit, but we have double digit returns, but really that growth strategy in your portfolio is going to be tremendous. So make sure you reach out to us. We also, Jay, we got a webinar coming up.
Hey.
Next Tuesday, $100 oil. You need to make sure you're on that webinar. Make sure you register. Again, if you're not sure where to register, go to kingoperating.com. Just fill out one of those learn more requests. There's a box in there. You can input information and we'll make sure that we get you the link to that webinar because we are going to do a deep dive into what's going on in the world, a little bit about what we talked about here with what's shaking up. How does this really impact investors and how can they take advantage of the surge in the interest in the energy sector right now? How can you take advantage of it? How can you participate in the upside and really capitalize on what is going on globally? So we want to make sure that you're on that webinar with us. And definitely you want to check out Jay's book. It is on Amazon. You can also listen to it on most audiobook devices. I know I have the audiobook of it as well. So if you want to listen to Jay, if you want to hear that Texan oil man voice, then make sure you listen to the audiobook. So he's checking it right now.
Yeah, you can listen to the audiobook. Yeah. Not sure what you think about that, but
that'll give you the full
I don't say
oil.
Yeah, I'm gonna have to change it up on the second edition and just say, hey, what the hell's the J unit?
There you go.
What the hell's the J unit? I'm gonna have to talk about that.
What the hell is a J unit? Are we allowed to say hell? Are we gonna get in trouble?
I don't think so. Don't tell me.
I'm just kidding. I'm just joking. I think in our slide deck it says what the heck, but it does roll better. What the hell is a J unit? I think that has more grit to it.
A little bit more cowboy. A little bit more Billy Bob Thornton.
That's right. A little more cowboy. So gentlemen, I want to thank you for being with me today and, tapping into everything that's going on around the world. Please make sure that you join us again here next week live. We're here every Wednesday on LinkedIn and YouTube for the oil and gas rundown. Make sure to check us out next week. Thank you so much, gentlemen, for joining me today.
Thank you.
Thanks, everybody. Thank you.
Bye, guys.
Good job, everybody.